Hello and good afternoon to everyone that is currently tuned in live with us on another episode of Phillip Trading Podcast. I'm your host for today and my name is Yongshen. So with me here today is my colleague, Liao. How are you doing today, Liao?
I'm doing great. How about you?
Yeah, I'm doing fine as well. Okay, so for today's podcast, we will be discussing on the topic, what happened when there is an iron grip in the world's second largest economy? So to our audiences out there who are currently interested to know more about China A50 and also all the Asian index, do not miss out this podcast. Once again, I would like the help of all our beloved audience today to share this video to all of your friends. So the more people that are watching this video, the more we are motivated to deliver greater content to all of you. And without further ado, let's jump into our topic for today. So what happened when there's an iron grip in the world's second largest economy? Following the outcome of the Chinese ruling party leadership reshuffle, Chinese stocks tumbled by the most since 2008 financial crisis, and with the yuan hit 14-year low, whereas Hang Seng Index continued to plummet towards the low of 09 to 08 era. How should investors trade in the China market? And listen to our Phillip Trading Podcast as we discuss the market landscape in China. So Liao, my first questions to you. The China A50 index and Hang Seng Index has been a sharp decline a day after the Chinese ruling party announced their new ruling committees, followed by a slight rebound recently. Can you let us know what is happening?
Okay, yeah, thank you. So yeah, the sharp drop that we have seen in the China A50 index and Hang Seng Index a day after, President Xi continued to stay in his third term, which is unprecedented in China because each president cannot serve more than 2 consecutive terms. So China had imposed this 2-term limit on their presidency since the 1990s. However, this was revoked by presidency back in 2018. 4 years ago, and now he's officially announcing his third term as the president of China, along with his 6 other members who are seen as his loyalists. So this outcome has shocked the market as a lot of China concept stocks had dropped a lot and wiped out billions of dollars out of the market capitalization and personal fortunes. So straight after Alibaba dropped about 15%, Pinduoduo lost 23%, and JD.com dropped 15%. So as a result, the China F50 index dropped, about 3.9%, a sharp drop in one day, and it is still enrolled to the low of 2018 period. Whereas for the Hang Seng, it dropped 6.4%. So yeah, not only the index has dropped, but the Chinese yuan has also weakened tremendously to a 14-year low against the dollar. So however, the next day rebound that we have seen in the Hang Seng Index was just due to technical rebound, as it was in the oversold area.
Okay, so with all this China A50 dropped and also like Hang Seng Index also dropped, what should we expect moving forward for the China market?
Okay. Yeah, so I think as we move on, there are a few things that we can, sort of predict and visualize the future that the China market landscape might become. So, we can first, by looking at the existing conflicts or issues that we are seeing now, which that might turn to worse. Okay, so the first one we need to worry about is the relationships between US and China again. So the questions that we might need to look at or ask ourselves is whether will there be more, delisting or banning of Chinese companies from the US capital market? Will there be more restrictions in the manufacturing and exporting of microchips or semiconductors between these 2 countries? Will there be more legislation or anti-policy to limit the use of technology devices or apps between the 2 countries? So at this point, all the answers are likely to be yes. Yeah. So, and the next one, we also need to look at, the geopolitical conflict with Taiwan. So just as Hong Kong is now under the realm of China, then I reckon the next continent that China, will set foot on to have more actions will be in the Taiwan continent. So it has been reported that the US is thinking of manufacturing weapons directly with Taiwan. So if we, foresee some of the conflicts that might turn out more ugly, uglier conflicts between Taiwan, whereby the US will set foot, pivot their Asia presence in the Taiwan area to kind of counter the power or the influence that China will have in that regions. Okay, and then in terms of policy setting, I reckon the capital market and the private sector should prepare to embrace for more monopoly crackdown. So pro-capitalist business model in the name of common prosperity. Okay, so yeah, so we should be expecting to see a lot more big corporate who has monopoly power to being cracked down and probably being segregated into a smaller entity. Okay, whereas for the COVID-19 policy, the country has struggled with their slowing growth this year in connection with COVID-19 lockdowns and travel restrictions that have hurt consumer spending and disrupted global supply chains. Yeah, so these are the things we should expect, moving forward for the China market.
Okay. And so if you're sharing just now regarding the relationship between US and China. So what actually should the investors take note of when they are trading in the China market as well as those markets around it?
Yeah, so I reckon in the near term, there are risks that we need to take note of. So the first one, which is currently the growing crisis, is the real estate crisis. So the real estate prices have plummeted as the Chinese authorities seek to rein in unsustainable debt and market speculations. So hundreds of thousands of home buyers are refusing to pay their mortgage for those pre-sold properties as developers struggle to complete their housing projects on time. So because the government is of the opinion that property is for the people to stay in, to live in, it's not a tool for speculating or to getting rich. Yeah, so this is the real estate crisis. And the next one is still the COVID-19 lockdown policy. So their ultra strict zero COVID policy might put a toll on the economy, health of the country, and the world supply chain. So whenever we see there's a new city or metropolitan being locked down due to there's a rising COVID cases, then we should expect the market will not react positively to their lockdowns. And in the real, solid, real physical economy, it will continue to sort of cause some turbulence on the world supply chain in terms of semiconductor or whether the import or export of the world trade. And next one will be the entrepreneur spirit. So with the monopoly crackdown, which will also aim on individual level, when you are the CEO of a big company, then you might have be expected to have some trouble with the government. So yeah. And lastly is a trade tension. So we have seen the world trade restriction. So the trade tensions and the tech war has expanded to semiconductors. So as the US government has imposed hard export restriction on the US chip technology out to China, investor now is fearing that such move will cripple the China's AI, artificial intelligence emotions. So yeah, these are the things investors need to take note of when looking at the China market and the market around it.
Okay, and okay, great. So what do you suggest on the technical point of view for the traders currently are in the indices market?
Okay, so well, obviously, at this point, investing in China is risky, and investors are right if you are feeling extremely fearful at the moment. Okay, but the truth is, extreme fear might open some opportunity. So if the might open for some opportunity if the contrarian bet against the fear plays out positively. So having said that, some of the world's most successful independent uh, investor like Charlie Munger, Michael Burry, and Ray Dalio, they have directly or indirectly highlighted the markets are acting a little bit irrational concern with regarding to investing in China. And accordingly, by buying China stocks, there might be an opportunity to capture, significant alpha. So yeah, now if we look at the China F50 chart, since 2015, it is on a very big uptrend until recently, a few weeks ago, the huge drop, whereby the market, the index fell below its major supporting line. So with this major, drop, we can put the next immediate resistance at around 10,179 level. So all in all, do not look for a long position during this setup and probably until next year. So yeah, it is a very huge bearish sentiment at this point and until next year. Whereas for the Hang Seng Index, it is best to maintain a bearish view from now on and not to enter any long position. And we shall see the next support at the low of 2008 level for the high.
Okay, great. Thank you, Leah, for the sharing. So I hope investors who are now holding the position for China A50 or Hang Seng, you could able to take note on the trading by Liao and the view by Liao. So thank you for your sharing, and I hope it will help the new investors out there. And to our audience who are interested to invest in China A50, we are currently having a year-long promotion. So clients are able to enjoy a super low brokerage rate of only USD 5 per lot. So for more details, you can drop us a message on Facebook and our representative will get back to you. And now we have come to an end for our today's podcast. If you have any questions or if you have any topics you want us to discuss next week, you can message in the comment box below. So thank you for listening to our podcast and happy trading for the week. Thank you for your time too, Liao.
Thanks, Young Shen. Bye-bye.
Bye-bye.